morning, guys. Todd here of Trading Analysis. Happy Wednesday. Welcome to the Elliott Wave Wednesday webinar. I'm Todd Gordon, founder of TradingAnalysis.com. You can hear the team in the background rearing to go. Hope you guys are well. We're coming up on some key economic fundamental data, as well as obviously a lot happening in the political realm. The 15th is a big day that everyone's focused on in terms of China. We have impeachment inquiries moving forward in the House. Markets don't seem to be too fazed by that. Let's see. Other than that, in the holiday season, my wallet is around here. I put something on Twitter that was kind of fun, and I thought rather than just start right off in the business, let's kind of talk about something uplifting. It's the time of the year. The end of the year, we have to think back about everything we did and what we're going to do next year, and also be thankful for everything we have, these amazing opportunities that are placed in front of us and are also earned by our actions, and to be appreciative of everyone around us. So I put this on Twitter, and this really, I thought was pretty awesome. It happened at a perfect time. Maybe you saw this. Basically what happened was... let me just pop this up here. Basically what happened is I was going to dinner with my wife last Thursday. And I'm a guy, I think, and I can't sit on my wallet. I don't know if you're the same way, but I can't sit on my wallet because, one, it hurts your butt, and two, it tilts your spine a little out of kilter, out of tilt. And, sustained periods like that is not good for you. So I always take my wallet. I try to put it on the dashboard of my car, but then my wife yells at me because she's got this thing about having stuff on the dashboard. It drives her nuts. So fine. Sometimes I'll put it in the console, but then I forget it because I can't see it. So my solution is to put it right underneath my leg on the seat so I can kind of feel it. It's not throwing your back off. The problem is when you do that, you get out of the car, sometimes it falls out. Well, anyways, I'm going to dinner, and it's kind of a business dinner. It actually is Thursday. And I'm like, well, I get out, and we're, of course, 2 minutes late, like we always are for this webinar. And I can't find my wallet. So my wife's yelling at me. I'm like, forget it. I was like, do you have your credit card? Do you have cash? Fine. So I retraced all my steps. I'm thinking of everything I did. I went to the eye doctor, went to the dentist, got my oil changed, I went to Best Buy, like everything. And I'm like, you know what? The last time I saw my wallet was at Best Buy. And I was thinking, oh, man, I bet you I lost it. And lost it there. So I get an email. I think this was Saturday morning. Out of the blue, this guy named Jordan Martinez, he's like, listen, I found your wallet over in Union Avenue. And Union Avenue is way on the other side of anywhere I'd been that day in town. So, of course, my mind goes to, oh, somebody picked up my wallet, tried to go through it, and threw it out the window. Nothing was there. Then I figured out it was one of those times where I put the wallet underneath my butt in the car, got out to go to dinner, dropped it right there, and couldn't find it. It was dark. So he emailed me, and he's like, look, I found your wallet. I searched your name. It was, you're going to have your wallet returned exactly as I found it. Couldn't believe it. So I went and I met this guy. And at the Saratoga Racing Museum, which is where he works, he's probably 25, and he goes, here's your wallet, wouldn't accept any money. And I said, this is amazing. Like, I can't, like, that is so amazing for you to go above and beyond. And he goes, I just want to do the right thing. So I was like, all right, that's just, please, what can I do for you? And he's like, he goes, tell me about your trading company. And, he's 25, he's struggling. You can tell he's working hard. I'm like, dude, keep working hard. This trading is not for you right now at this point in your life. So he wouldn't take any money. So long story short, I left. I took about 2-3 steps out. I kind of waited for him to go back downstairs, go back to work. Came back in the building, and there's 2 ladies working the front desk. And I said, here, take this money, hide it somewhere where he'll find it. And also, is there anything I can do? And she says, yeah, in fact, there is something you can do. This guy, he goes, he's a part-time employee at the Saratoga Racing Museum, which is the horse racing museum within Saratoga Springs. And the lady said he's such a good guy, he works harder than most full-time employees. He's a part-time employee. but he's really working hard to try to get full-time position because he's a horse trainer in the summer for the track. So she said, here's the email of the director of the racing museum. If you do anything, if you want to do anything, send an email to her to tell her of your experience with him. So this is the email I wrote. And, you know, for me, they got a lot of Twitter attention, and there was a couple people even offering him jobs, and it was pretty fun. So, you know, there's my uplifting holiday season. And I put this not out here to get recognition, but just to kind of put the message out there that this is the time of the year to be appreciative, with an environment of so much spite and so much biting sarcasm and so much negativity, and the division within this country is sickening, and we're only less than 240 years old, and God, we're taking so much for granted, and just little deeds like this. I mean, for me, this tweet's been seen by 25,000 people, and I think we brought a little bit of happiness to everyone's lives. So anyways, just wanted to say that and start off. That was the most important thing, I think, to start off the webinar. Team, good morning. How are you guys doing?
Good morning, Todd.
How's everyone doing? Have you guys all done your little bit of goodness, either donations or actions? Have you all done something to show what amazing, opportunities we have? And I don't know, just whatever. Say yes.
It's America.
Yes,
absolutely.
That's a good story.
It's America, but it's everywhere.
It's a great story.
Yeah, it is. It is. I was so impressed by this guy, and he wouldn't take money. You could tell he's working hard. He's 25. Who has money at 25? And he wouldn't take it.
Sounds like he's got a good work ethic going for him.
Absolutely, absolutely. And I think something good's going to come out of it. So, anyways, so good morning, guys. What's to start off here? A lot going on the political front. As I said, markets are mostly range bound. I'm going to leave the heavy lifting to Bennett on the S&P. I've been kind of taking it easy into the end of the year, taking care of stuff at home that the wife's been yelling at me, my honey to-do list, kind of taking care of stuff around here, and the team has been doing a great job keeping us on track. So I've been actually consuming more of their research than my own. How's the volume? Am I okay?
Yeah,
I'm okay.
It's good.
Good. All right, good morning. Good morning, everyone. Okay. So let's do this. One thing that I wanted to show you guys, I'll just kind of start it off briefly. I'm just so much in the habit of starting on the indexes, heading down. I still think, we're in an environment where the political realm is extremely daunting. Everything happening in the political realm is extremely daunting. Everyone wants to hate this economy and prepare for financial Armageddon. I think we are not in that position right now. I think we continue to be fairly well supported. I'm going to leave this to Bennett, but our primary outlook for the rest of the year is sideways. And let me just zoom in here. Bennett, I want to make sure my analysis is synced with you. Your primary count right now is the red. Is that correct? The red count?
Yeah, that's correct.
Okay. All right. Well, again, I'm going to let Bennett do most of the heavy lifting here, but predominantly, guys, I think what he's going to say is we are in a fourth wave within a longer-term uptrend. We are still coming out of a triangle that was most of 2019, and what I find interesting, of course, this is I think the most important topic was the imminent, pending, significant recession that we were going to go through with the S&P just a couple percent off all-time highs, and here we go with the S&P breaking to new highs. And I'm like, okay, now that we started to move up, I would start to think that the sentiment would improve and people would start to get a little bit more bullish on the American economy. But then I see something happen in the indicators yesterday, the internals. I said, here we go again. Like, everyone is in such a grumpy mood. Like, what's up? God, if we look at the skew, okay, so let me bring this chart over and let me get myself out of the way. This is the internal screen that I look at to kind of get the underlying theme of what's happening. Let me start with tick first. Okay, this is the amount of upticking stocks first, downticking stocks on the New York Stock Exchange this second. When you get a reading, okay, this is going to be the blue indicator right here. When you get a reading in the kind of gray shaded bars here, 6, 7, 800 on the ticks, that means there's 600 or 700 more advancing stocks than declining stocks, upticking stocks versus downticking stocks. Not net change on the day, but upticks versus downticks. That means there's 600 or 800 more advancing stocks that second than declining stocks in the New York Stock Exchange. When you get 600, 800, or even 1,000, that indicates widespread institutional buy program. And those are the guys who really move the market. When somebody comes in, presses a buy button on their keyboard, buys the 500 stocks in the S&P index, that's where you get one of those big tick readings. Same thing on the downside. If somebody comes in and hits a sell program, you get much more widespread selling. So what I like to do is, for day traders, this is probably the most important internal. As swing traders like we are, and position traders in investment time frame, I like to take a moving average, and I actually like to stretch it out. This is a 60-minute of the tick, and you can see I've buried the actual tick bars behind. I've taken a teal moving average, the 9-period MA of ticks, just to get a general trend. And I've been tweeting this quite a bit to show some pretty good turning points. It's one of my favorite indicators right now, besides obviously Elliott Wave, which is not an indicator, it's a way of life. But when you see divergences between the moving average and the S&P, it tends to be a pretty good leading indicator. And the S&P is here in purple. The 9-period MA of 60-minute tick is here. And this is all just done in Thinkorswim. These are free charts that anybody can get. And for me, I think this is a pretty awesome uptrend. We've got 3 higher highs in the MA. So what does that mean? The highs are getting higher and the lows are getting higher. So we're seeing more institutional buy programs in, with the S&P not at a new high relative to over here on the left, 31.51, whatever, 31.54. So we've got a little bit of SPX tick divergence. I think it resolves ultimately higher. We'll have to see what Bennett says about that. The other thing, and that's kind of the point of my whole story this morning, talking about how much sentiment is out there, bearish sentiment, how social mood, maybe taking a book out of Bob Prechter's book, maybe social mood is pretty nasty right now. But this is an indicator that I've been watching for a long period of time. This is the skew. This is the vol skew. Basically, the VIX, guys, is the volatility index measures at the money puts and calls in the SPX, right? The more expensive both puts and calls are in the SPX, the more uncertainty there is in the future, which is the same thing. Uncertainty is essentially volatility, right? The more up and down we're going to go, the higher the volatility, the more expensive both puts and calls are. Those are at the money SPX options. The skew is different. The skew is measuring how much traders are willing to bet for what they call tail moves, or plus and minus 2 standard deviation moves, right? So the lower the skew, okay, basically to make this simpler, the lower the skew right here, the less expensive -2 and +2 standard deviation puts are relative to the calls. It's a little bit of a confusing internal like this, but it's basically measuring the expensiveness of plus and minus 2 standard deviation options, which are not at the money, plus and minus 2 standard deviation options relative to at the money. With an indicator very low down here, around 110, those plus and minus 2 options are not expensive. So people are not paying for tail risk protection. Okay, so I'm saying, what's going on here? Something is not right with this. S&P breaking new highs. Nobody, despite the prevailing bearish sentiment out there, nobody's paying for out-of-the-money options. And if you scroll back here, this is a weekly chart of skew, by the way, over the S&P. Right, you can see that we get down about 115, 110, 111. That's very low skew. And there's not as great of a correlation, but what I find very interesting is just over the last couple days, there was a big bid up into tail protection in the SPX, which caused the skew to break out. Now, if we just go back and say, well, let's look for periods of consolidation, what does it mean? Well, here's a period of consolidation back in 2017. Skew broke out, the S&P went nuts. Okay, here's a period of consolidation here, right in here. Let's see, skew broke out. We actually sold down here a little bit in the S&P and then rallied. Okay, I mean, this is the end of 2000, Excuse me, that's October into 18, or sorry, what am I saying? October of, yeah, that's the end of 18 right there. This is a weekly chart. November, October into 19, we made a low. We move up. Skew has been in this range, and nothing really has come of it since. So I'm just looking for other similarities. We have a bit of a consolidation here in skew, break higher. The S&P does a little three-wave move back here in 2015. So what does it mean? I don't think skew is as reliable of an indicator as we use in the rest of the internals or the internal panel. But I think people are starting to finally put their money where their mouth is in terms of protecting on the downside. And when money is going into downside protection, for me, I think that makes it more bullish. They're saying the same thing's going to happen again. Oh, there's all kinds of uncertainty around the election. We want to protect ourselves. We've got Chinese trade wars, blah, 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 blah. It's like, I feel like the election was just 6 months ago. Like, here we go again. So for me, I think it's interesting. We'll monitor how this skew develops. But for me, it makes it more bullish. I continue to be bullish in this market. I still think 2019 might have been the end of a fourth wave correction, and we have significantly higher to go. That's the way I'm positioned, and that's the way we're building our portfolio with our members to take us into 2020. All right, so from there, let's bring the team in. And guys, questions or comments before we jump into the index charts, or should we just head right in?
No questions here.
Terry, you got nothing to add to all that?
Hey, man, when you tell a good story and I'm aligned with it, I'm just cruising along. So
It's very seldom the case you'll push back. All right, that's awesome.
The only thing I want to say is that the market loves political gridlock. So as long as the government's doing nothing, the market's going to soar.
That's what I'm saying. So, if Warren somehow comes in, I still think the market rallies. I mean, I think everyone's
but that's a direction. Once that decision is made, then the market knows something. But right now, it's
yeah, to your point, political gridlock, and I think the trend that we're seeing in the equities transcends whoever's in office. We shall see. Healthcare is being bid up there. We've got Fed that's out of the way. The Fed is extremely easy. They're not going anywhere. They tried to raise rates again for the second time in 5 or 7 years. First was taper tantrum way back. They just tried to tighten again. Markets said, "Screw you. We're not doing it. We're not going anywhere near that." So I think the Fed's out of the way. We have earnings, another 2 months. So we just got done.
Earnings actually were pretty good.
Earnings were good.
Season, I mean, there were a lot of people were expecting earnings to be poor, and there were a lot of beats, a lot higher percentage beats than.
And look what happened. So. And you brought this up yesterday, Terry. Semis are up 2% again today. Like, it's kind of hard to fight. And Apple's at 268, 269. I mean, like, stop. Like, everyone stop. All right, but that being said, using the Elliott Wave that we have, the Elliott Wave that we do, that voodoo that we do, that voodoo that we love. Let me bring in Bennett here. Let me just take Terry out, put Bennett in. Bennett, sir.
Good morning, Todd.
Good morning.
YouTube.
Can you buy me some time? Terry didn't yell at me. Can you tell us a story while I launch? Go to me didn't bring you up. Terry, you didn't yell at me?
Yeah, absolutely.
Who's got a story? This will take a minute. We will
Alex
bring Alex.
has always got good stories.
Yeah, Alex, can you make fun of me or something, Alex, like you always do? Oh, when I put you on the spot, huh? And he's muted.
His mic is off.
He's got.
Alex, your mic is off.
Why? Do you hear me now, guys?
I hear you now, buddy.
Yeah, there we go.
We got you now, sir.
I don't want to ruin our entry and your entry to a Christmas party, but I won't be that bullish as you.
You know what? And we talked about this last week. This was the last Wednesday webinar, right? Or was it the member webinar, Alex?
No, last webinar, last public on
okay.
this spot we talked about that.
That's right. Alex has got some pretty compelling bearish setups in the macro space, specifically fixed income and currencies, which I definitely will take note of. They're seeing some FX, which the volatility is the lowest in decades in FX. I mean, this will change. And if it goes in the direction Alex is thinking, this might not be good for equity. So that's something we definitely want to keep an eye on. So Bennett, you are driving?
What we're seeing from Alex there, a lot of that is actually in line with what's been our primary interpretation in the S&P for some time, that being the contracting variety triangle. So once you get, there we go. All right, guys. So we've been tracking two primary counts in the S&P, and both interpretations. What's really fantastic about the Elliott Wave theory is, I actually discussed this a little bit yesterday. Somebody had brought up the point that, if there's multiple possibilities and multiple interpretations, then what good is the wave theory? Well, having multiple plans is all about having context in the event plan A doesn't go your way. So what's been really cool about both of the interpretations that we've been tracking in the S&P and the NASDAQ is following this period of consolidation throughout the summer, both counts called for the breakout higher. So while everybody was seeing this as a head and shoulders looking for a move lower, we were able to look at the markets through the lens of the Elliott Wave principle and see the pending breakout on the horizon. Now, going back to Todd's point and him seeing additional upside, both of our counts at this point do support additional upside. So this is the weekly chart of the S&P 500, and this is our contracting variety triangle count. And we've had this for about a year and a half, and I still think this is a count to definitely keep on watch as a very strong probability. So this count essentially puts us into a fourth wave period of consolidation that, as you guys know, squares up to this flat that ended back in, 2011. We have an alternate possibility that, in fact, either wave 4 came to completion at the 2018 lows, or in fact came to completion here in October in the form of a Y-wave triangle, which I don't think many people are talking about. And this is something Todd introduced, gosh, I think it's been a few months now. This is a count that we pulled from the NASDAQ and Apple. And even though we're tracking it in the NASDAQ 100, it actually squares up here in the S&P. So while you could look at the wave 4 low as December of 18, and this is wave 1 and some sort of complex wave 2, we could also simply look at this as fourth wave completion here in the form of a Y-wave triangle. Following the triangle, whether that is a B-wave triangle of a higher degree B-wave, part of our contracting variety triangle, or in fact, this is going to be one of the higher degree wave 5, has obviously yet to be determined. In our opinion, both interpretations still call for a near-term move to new highs. So getting you back to our primary, let's get us off the weekly, going to take you guys down to the daily. Here's this long period of consolidation that was just a lot of chop and slop throughout the summer, and we finally resolved higher. Taking you off the daily, we'll take you down to the half-day chart. We had a beautiful series of 1-2, 1-2s, nice extended third wave. We had equality of orange 4 and orange 2. We had equality of blue 4 and blue 2. And in addition, we also had the orange degree trend channel, which I'm going to go ahead and remove it. As you guys know, once we have the completion of waves 2 and 4, we can draw a parallel line to create our channel over the top of 3. And more often than not, that gives you the wave 5 highs. So that gave us a wave 5 push just shy of a 2618 extension of waves 3 and 1. And now we've entered a period of consolidation. And this is actually a fourth wave that we were expecting. This is something that we put out with our members. We've had a 5-wave move off the highs, and thus far we put 5-wave moves, a 3-wave move back to the upside. So 3 down and 3 up. From this point, this could obviously be a wave 4 flat, in which case we're going to have 5 down. Could even be a complex, which would still call for a 3-wave move down. I think more than likely we're going into triangulation. Beautiful equality of C and A offered the intraday high there back on the 6th. We were just a stone's throw away from equality of C and A, which would be indicative of a 3-wave measured move. Getting you back to the daily, here's this expanded resistance trend, which we've since broken over. So a period of consolidation in the form of an Elliott Wave triangle over this line is actually most appropriate. So off the daily, back down to the 195. I think we're going to be range bound and sideways into the end of the year. And this is also applicable in the NASDAQ as well.
I'm just flipping the rest of the screen or the rest of the team in here, Bennett. Sorry, that
Yeah.
chart was a little small.
Yeah, no worries. And taking a look at the NASDAQ 100, we have the same story kind of unfolding here. We've had 3 off the highs. We've put 3 back to the upside. Equality of CNA offered us the high there. We were, gosh, I think 2 points over. The high was at 84.2577 versus 84.23. So sideways consolidation, in my opinion, should resolve the markets higher. Now, if in fact our contracting variety triangle count is unfolding, which is still a possibility and would be more in line with what you're seeing there in the skew into the end of next year, we'll be watching a move to new highs. So both counts are going to call for a move to new highs, in my opinion. What happens from there will help us determine what the higher degree trend is.
Very nice. I'll show you the positions that we're carrying right now, and just head back down to the maybe half-day S&P just to give us that perspective again, and we'll show you the positions that we're carrying. For the next couple weeks, to Bennett's point, we're in potentially wave 4, that green 4 just above us. It could be a flat, could be triangle, could be complex, could be unrecognizable, doesn't really matter. We shouldn't see much movement over the next couple weeks. So we're positioned as such for no movement, which is the butterfly that we're in. So let me just pull this up. Let me go to my Roth. Yes, I'm trading index options in my Roth IRA. Can you believe it?
I love it.
Great rule. Pattern day trader rule still hanging around for some ridiculous reason. You can't do more than 3 or 4 round trips in a week, but you can trade SPX options in your Roth IRA. That makes a hell of a lot of sense. So here's the trade that we're in right now. We're in the 20Ds, the monthly December expiration. So we got about 9 days to go, 9 calendar days. I'm long 3 at 30.60, short 6 at 3100, and long 3 at 31.35. So what you're doing is you're long 6 options at the wing and short 6 at the body. And all you're looking to do is capture the range. And, for my money, there's no better methodology out there to determine when a range might fall in, mainly a wave 4 or B or X wave correction, and how long it may last, because you have proportionality compared to prior corrections, prior trend waves, to give you an expected duration of it. Is it going to be a perfect forecaster of exactly what's going to happen? No, but it gives you really good guidelines and rules around which you'll structure the trade. So, that's why we love Elliott with options, because if it's in motive wave impulse breakout time, you're buying premium. If you're in corrective sideways periods based on the Elliott Wave methodology, you're selling premium and you're theta positive. So right now it's time to be theta positive and kind of dial your deltas way back. Right now this position is minus 14 deltas, making $53 a day. That's theta positive. We're up at 31.32, so we're getting a little far. I don't want to see any more rally. And if I just, flip back to Bennett's chart, he has a B wave top up there. So if we see a C wave decline down to 30.80, money, that's perfect. If we go down to 3100, which is the body of the butterfly, I stand to make about $9,200 for a perfect pin. Anywhere in here would be money. I'm looking at this purple number over here, 7,500, 6,500. So I really want to see the market back up here a little bit. And if we go too far down, I'll lose money. Max loss is $2,640 on the downside. If the stock market crashes, anywhere in here would be some nice profits up there. And if the market goes straight higher, explodes higher, I lose 1,100. So I'm risking $2,000 or whatever to make 10 potentially. So I'll take it. The other trade, Bennett, are you tracking, yeah, you're definitely tracking TLT. So my repository is a little funky. Can you take us through the bond count with the same position?
Yeah, definitely. I'd be happy to. So let's go ahead and take a look at, let me bring over yields as well. Just 1 second, Todd. All right. You're still sharing your screen.
Oh, sorry.
You're good.
And there you go, sir.
All right, so we're taking a look at the 10-year yield here, and we discussed this before. While we were moving higher in a wave 3 in bonds, obviously we're moving lower in wave 3 in yields. We've since put in a complex fourth wave correction back to the upside in yields. This would imply a move to new high in bonds, a move to new low in yields. Taking you off the 10-year, going over to the 30-year, we have a very similar story unfolding here following this third wave completion. A nice fourth wave move back to the upside. Taking you over to what we're seeing out of TLT. Here's the wave 3 to the upside, and here's the complex fourth wave that unfolded. We had a nice zone of support here in wave 4. We had multiple degrees of trend offering fib support, and we've since put in a nice 5-wave rally and a nice 3-wave correction back to the downside. Pretty decent zone of support here. We have a 1272 extension of green B. We have equality of C and A, and we also have the overall 61% retracement of that 5-wave move. This is, we have a position out to December 20th, centered around 140 in TLT. Watching this very closely for that possible wave 3 break to the upside.
Very nice. So with that in mind, if we're looking down to 138, same thing. I mean, this is kind of the theme, as I'm just kind of stressing. It's just kind of a boring, I think it's going to be a boring market, and we're positioned as such. So same trade, here's TLT, centered around the 140 in the same monthly DC expiration. I'm long 10 of the 137s, short 20 of the 140s, long 10 of the 142s. So the body is 140, $3 below the body and $2 above. The difference between the strikes, if you kind of push that upper strike down, it makes it more of a bullish trade because you're pulling in more positive delta, which gives it this kind of broken wing butterfly effect. Right now we're in really good position, up about 390 bucks, whatever. If we're here 10 days from now on expiration, I'm up 1,360. If the bond market wants to rally up to 140, got about 2,200 to make, and 574 would be the profit today. Max loss is going to be 720. If bonds absolutely get smoked, that's all I can lose in the trade. And if bonds explode higher, I make 280. So we're looking to get up to the 140 mark. Let me just go back to Bennett's 140. Yeah, hit TLT again, Bennett.
Yeah.
Okay. So I'd like to see this wave 2 sort of end and wave 3 to begin. And if we can catch something closer to 140, obviously that would be perfect. But guys, name of the game, we're seeing a lot of consolidation here into the end of the year. Okay. Let's see. Other things you want to cover? I've got a question for AMD and Baba. Bennett, is there some other ones that you wanted to hit?
Yeah, I'd love to run through a couple of charts really quickly. So
Sure.
Let's cover AMD and Baba.
Okay.
So Alibaba is one that we got brought you guys, several weeks back, looking for this post-triangle divergence out of the fourth wave and getting you down to the 195 half-day chart. Following the completion of E of orange 4, had a nice little 5-wave move in green 1. Beautiful spot-on 61% retracement. We can then count a nice 5-wave move here in green 3. Green 3 took us just over a 1618 extension of 1.
Yep.
We had a wave 4 squaring up to green wave 2. And I think we're coming into green 5 completion, which is going to create the initial 5-wave move post-triangle thrust. And this is actually a completion that I'm going to be watching pretty closely for a wave 2 correction. If we were to take this contracting triangle and extend a trend line off of that, we have some confluence with our fib support or fib retracement levels that we're going to be watching. So I'm actually looking for kind of a near-term move higher, followed by a correction here in blue 2, at which point I'll be watching for a third of a fifth development. As far as AMD goes, AMD still looking very strong. This is one that we brought you guys out of this green wave 2, looking for a move higher. Getting off the daily down to the 195, was this some sort of very shallow wave 2 correction? I'm not ready to call that just yet. This move here, it's a bit difficult to squeak out a nice completed extended third, but more importantly, from a higher degree standpoint, I really don't think now would be the most opportune time to be entering this particular setup. It's a bit extended. if in fact we're going to see this higher degree third of a third unfold, which would be fantastic, and I do think the fundamental support, I still think we're in for a bit of a larger correction from a near-term standpoint. So I wouldn't jump in just yet. This could absolutely be the makings of some sort of wave 2 flat or complex.
So
what are your thoughts on AMD?
Totally agreed. And what's scary is, let me show these quick. Terry, check Slack and let me know if you want to hop in there on RG. This is mind-blowing. Let me show you guys this quickly. The open interest and the options. I did a CNBC video on this last week or something. The open interest, I haven't checked it since last week, and options that are not expiring January 2020, but 2021 options. Check this out in AMD. Mind-blowing. All right, so AMD is above us. 2021, 772 days away. If we do... Where do we go? Never mind. Oh, January 21. That's it. Sorry, not 20. There's not these guys. Oh, sorry, those are 22s. January 22s. Those are 2 years out. I'm losing my mind. January 21, 401 days. Look at the open interest at the 65 call strike. 54,000 contracts open at the 65 call strike 13 months from now. 53,000 contracts. Last time I checked is not even as big as any open interest in the current front month of AMD. So if we go to 20Ds, look at the open interest. 21,000 at the 40 call strike. Let's go out to Jan monthlies. 44,000 at the 25 strike. There's a 54,000 at the 35 strike right there. So you have as much open interest at those 65 call strikes as you do the at the money or slightly in the money round number 35 call strike at the front month option. For me, like, somebody wants to buy AMD 50% higher a year from now. So when I look at Bennett's analysis there, I mean, that's unbelievable. Okay, perfect. So from here, let's turn it over to Terry. Terry is going to do some relative rotation, which is a really, really good sector rotation tool that we've been using. Terry's been kind of spearheading that, not kind of, is spearheading that. Let me just get you perfectly framed here, Terry. And we'll bring you in. And looking good, sir. Good day to you. Terry is now. Did you make yourself?
I need to get my screen sharing here going.
You should make yourself presenter.
Yeah.
Presenter. There we go.
Share screen, and you should have.
There we go.
So let me be quick here and save a little bit of time for Alex, guys. So in our sector rotation studies, I just want to make a couple of observations talking about Bennett's S&P chart, which, let's see here. I seem to have lost my chart as soon as I panned into it. In the near term, in our 1 day daily rotation, I just want to talk about being in the time frame that we are in this consolidation period, where the defensive sectors such as real estate and utilities and staples, you can see them moving from the improving quadrant up into the leading quadrant. And so this is on a very short term. What we're seeing also is the tech sector slowly rotating down into weakening, but I have seen quite a sharp reversal here. Okay, so what this to me just is conducive to the overall pattern of the S&P trending sideways to lower in the very near term. But in the time frame that we're looking, a little bit larger time frame in the weeklies here, which sectors are the ones that we're keeping an eye on? And it's not these defensive sectors. The defensive sectors, utilities, real estate, They're not the champions of the market right now. Even staples, they're over in the lagging quadrant. The ones the sectors that we do need to be keeping an eye on is the healthcare sector here. Industrials have kind of been zigzagging back down. Again, remember the center here is the S&P benchmark. You have relative strength on the x-axis and relative momentum on the y-axis. So anything that's above the horizon here has more momentum to it. You can see anything with a near 45-degree angle, such as the healthcare here, is gaining ground against the S&P in terms of momentum and relative strength. Financials in the same boat. Tech's taking a little bit of a pause, a little bit of a break, and I think that's going to fit perfectly within this this consolidation phase that we're talking about. So I don't know what happened to my chart here, but that's okay. If we do look into the tech sector here, the tech sector is polarized. There's a large grouping of semiconductors up here in the leading quadrant, and everybody else is kind of floating around in the middle or in the lagging quadrant. So it's not broad-based. There is no broad-based movement right now in the tech sector. It is localized, and we use this tool from Optima with these relative rotation graphs to try to identify which of those stocks are outperforming others. This bottom graph here is benchmarked against the XLK. So if we want to look inside the tech sector to which of the stocks are actually leading all of the rest of the sector, we see NVIDIA, Apple, Intel, Broadcom, and Qualcomm all up in the leading quadrant, although we're noticing that Apple and NVIDIA are starting, and Intel are losing momentum. Their relative strength is still outperforming the XLK, but they are losing momentum, and I think this is just indicative of what we're seeing in the sideways fourth wave movement. A lot of the other tech stocks are sitting down here in the lagging quadrant, just wandering around, and you can see a few of them have started to point north. Microsoft, Adobe, automatic data processing, Fiserv. These guys are going to make their turn and come back up into the next group. Keep an eye on a few of these.
Very good.
Okay.
Very good.
I do have. I thought I had semiconductors up here. What did I do? Oh, here it got renamed.
Okay.
Semiconductors, SMH. So this is the so the semiconductors continue to be the leading part of the industry of the tech sector, and you can see they're inside the semiconductor industry segment of the XLK. A large portion of this is up in the leading quadrant. This is a weekly rotation graph compared against the S&P. So I continue to like the semis. Where's AMD? Here's AMD. Look at the length of the tail.
That couldn't be any better, right, Terry? That direction, that heading, that location for AMD, like, right?
But this length of this tail represents a very high velocity. Okay, so the momentum and the relative strength are both gaining ground in AMD faster than just about anything else in this sector. We saw something similar to QRVO several weeks ago, and QRVO is still
sorry to interrupt. I still keep thinking when I put a higher target in AMD on CNBC, how I got skewered by the Twitter trolls saying it was overvalued.
I wouldn't doubt it. So
sorry, please.
I wouldn't doubt it.
I'm going to stop helping.
Yeah. So AMD has been on a run since like 2015, right? So 2016, January 2016. Here's their move up. And I'm sure Bennett's got a nice good wave count we can put on this, but I think we continue to see a push higher in AMD. So I like that. So I'm going to be brief today and give Alex a little bit of time if he wants to talk.
Sorry, my story took too long in the opening. All right.
No, not at all.
Let's see. Yeah, let's keep it on this screen. And Alex, you make yourself presenter. Nope. There you go. Show us what's happening, Alex. I love this tweet. Alex, you're muted again, man.
Alex, we can't hear you.
Can you hear me now?
Yeah?
Yeah,
Now we
got
can
you.
hear
Okay.
you.
Yeah, so this is the $120,000 banana artwork, and we did the replica in Serbia, our style. So with a sausage, it's kind of a state mark. So it's a nice nice display of a state kind of a liking of people. So it's a nice. We don't sell this; it's unique, so it's you cannot get it for any money. So.
Hold on,
Okay,
hold on.
so
Put that back up. This is going on Instagram. This is going. Put it back up. Oh,
yeah.
all right, got it.
Okay, so let's go to the Bitcoin chart. We are still staying positive and bullish on a Bitcoin. A few things very, very nice aligning. This is the bullish wave count, and I will show you why it's not my primary wave count. We have a 5 waves up in a wave 1 and a long dreaded correction in a WXY, flat in X, and another AB for a Z. And this wave count actually portrays that this was a wave too low right at the 786 time relation. So as you can see here, the Bitcoin is respecting magnificently these time relations. Here is 618, 786, and I think next one will be around 7th of January at 100% time elapsed in a wave 2 compared to the time elapsed in a wave 1. Okay, I will show you why I don't like this ABC, because this A down, B up, and a C down. The C is very long. So I will show you the usual triple zigzag, which is very discernible. You will see 3 waves down in W, X, and then 3 waves down in Y, and another X, and a very discernible ABC for Z, which I don't like here. So I will switch to this wave count, which portrays exactly how I see this last zigzag here. So I think it will be it is a 5 waves down in A. I'm looking for a move up in B and a final push down in C to this 100% 7th January 2020 lows. So this is my projection for a Bitcoin. We don't have any exposure now. We caught some of the move on the upside, and I'm preparing here to buy a Bitcoin for a longer term clients, for longer term holds for our member, because I think this is a very corrective pattern which is unfolding now. For any case, as we are used to have a reserve wave count, this is my worst case scenario, that we are in a big triangle here, and that will prolong the move up until June 2020. This is my worst case scenario for now for Bitcoin. So we are staying very, very bullish after this correction is done, and I'm looking to go long exactly on 7th January 2020. So the rest of the cryptos.
That's Christmas Day in Serbia, by the way. So it's a nice.
Yeah, it's Christmas in Serbia. Yeah. So on Ethereum as well, many of the cryptos displays another push lower as you look at it. So this is a sideways price action. So it aligns with the Bitcoin. Ethereum and Bitcoin has a very high degree of correlation. So I'm still going to expect, as I said, one more move lower in a Bitcoin to fulfill this nice archetypical correction in a clear discernible ABC for the last Z, and that will be my entry point. And if we see a break of this very nice corrective channel, which held nicely upper and lower levels, as you can see everywhere, I think that this will be the focus point and the place for longs. So that's our plan in cryptos. So let's go to Forex a bit. Today is Fed, tomorrow is first Lagarde ECB meeting. I still have a 2 wave counts on a euro dollar, which is, as you said, the lowest volatility range, I don't know, in the last 40 years or something like that.
In some FX pairs, yeah.
Yeah, so this 200 moving average still is keeping upside momentum kind of a capped, and I don't want to be overly bullish or bearish now. I'm still slightly tilted to the downside because I have a very nice fib cluster here around 1.08, 1.075, and the Macron gap here. So if I see a slightly hawkish Fed today on a boost of the NFP numbers, I guess we will see another push down, and from here I want to be long euro dollar. On the bullish wave count, I also have this as a wave 2, and we are going up. But I'm slightly tilted to the bearish scenario after the Fed today and Lagarde tomorrow. As the risk off is concerned, my greatest worry for the bullish wave count is this dollar Japanese yen chart. I have this as a triangle B and final C down to 95 levels, which portrays a relatively big move to the downside and flock into the safety into Japanese yen. For now, I look this as a 1, 2, 3, 4, 5, a very nice discernible 5 waves up, move down in A, triangle in B, and I'm gonna put some shorts either today or tomorrow on dollar yen in anticipation of this wave 3, 4, and 5 move lower in B. And from there, I can see a very big move up in dollar yen, which actually squares up to your 5th wave in S&P in sometime end of the 2020 where the election passes. So this will be my scenario.
Tie that back for equity investors, equity traders. If dollar's being sold off and yen is being bought, that's global risk off, risk aversion. A lot of global fund managers will run into the safety liquidity of the yen to hide out. So that would equate to lower equity. So if that starts to transpire, watch out. And you guys with equity portfolios, you could take this piece of analysis and you could look, if that means dollar sells off and yen goes higher, you could go to the yen ETF like FXY, and as a nice hedge, it's something we might consider doing, kind of buying out of the money call spreads or out of the money call butterflies in FXY as a nice hedge against your portfolio. So just keep an eye. And clearly, if dollar yen gets below 105 spot, yen's being bid and something's happening, and that will impact fixed income and equities, I can almost guarantee you.
Also, one more chart on that account. I'm still watching this dollar renminbi chart, which is for now still holding the crucial and key support here. I have this as a 5 waves up in A, down in B, and potentially we are moving higher in a green wave 3 of C. So this portrays again adding of a liquidity or a yuan devaluation from China. I want to see in a different scenario clearer breakup of these two levels here. If I don't see that, I think that we will resolve on the upside from here in the orange wave 3, which will have a greater implication on the world markets as well.
If this goes lower, Alex, if dollar China goes lower, dollar yuan, that's bullish for global equities, right?
Yeah, that's bullish for global equities.
Okay.
So they will pair up with your bullish S&P count.
Yeah.
Also, we have one chart we are tracking very closely, and correlation of gold and dollar yen is very high. So we are still looking this corrective pullback here. This is clearly corrective from the Elliott Wave standpoint. I have this a little bit differently. A up in B, down in C, triangle in X, and I'm looking for another move down, which corresponds to a slightly higher dollar yen, which I will take for an entry, and then a big push up in gold in a final 5th wave in C. So they all kind of align with a big risk-off event in some sort in the beginning of 2020. What I'm seeing on this chart is not very bright picture, at least on the short term for equities.
Very good, very good. Want to leave it there, Alex?
Oh yeah, sure.
Okay.
We can. I mean, there is also Aussie yen, which is not, which is kind of still consolidating here. But I think very soon we're going to see a break of your famous few years 70 level hold, and I think we're going to go down in a wave 3. This big trend line on the upside have kept so strongly the moves on the upside up to now. So I'm looking a little bit higher, and the rollover with dollar yen and risk off on the wave 3, 4, and 5 to complete there. So there is a pretty much of the charts aligning to the risk off event for now.
Very good. Very good. Guys, good show. So if you're watching, and we still have a lot of viewers in there, appreciate it, guys. Hit the thumbs up button on YouTube if you don't mind. Let YouTube know that you enjoy the work and you enjoy Alex's fine art, fine Serbian art. Just click this little thumbs up right here if you don't mind. If you want to be a troll, you can hit the thumbs down. Fine, it's a democratic process, but hit that thumbs up. Drop a question, comment, insult below. Let us know what you'd like to see. Also, throw it in there for Jerome. What I say? Oh my God, Jordan. Excuse me. Cut live video. Jordan Martinez.
Jordan.
Great dude. Hit a thumbs up for them. If maybe you have job of a lifetime you're looking to fill by a wonderful character, hit Jordan. And
we need more Jordans in this world.
We need more Jordans in this world, absolutely. So anyways, guys, great job. Trade Analysis Team, the best. So you can find us at TradingAnalysis.com, guys. We have trials in stocks, stock options, Forex, and crypto. Terry's doing an amazing job on the software side in terms of motive wave and relative rotation, and also doing jack of all trades. So we have a great team at Trading Analysis. Check us out. We will have guests coming back. We're stacking some. I'm stacking some good guests for the next year, for the 2020. Be thinking about, guys. What you're going to do for next year. What it is you're doing with your finances. Where is your capital best used? We're going to be looking at some sort of ways that I've been kind of maintaining my money. I'm kind of moving money around in a tax efficient way to be able to trade short term in the options market, but then take advantage of what I think to be a longer term uptrend, despite what Alex is saying. He's a little bit more concerned in the near term and certainly going to be watching. So, look for a lot more to come from this awesome team here at Trading Analysis that I'm very proud to I guess, be called the leader. But these guys are obviously doing a lot of heavy lifting. So check us out, TradingAnalysis.com. Throw a thumbs up in there, and we'll see you guys next. Let's see, team. Are we going to do a webinar next Wednesday?
Probably.
That's going to be the 18th.
It'll be the 18th.
Yeah. Yep. Obviously, the week after will be Christmas, so probably won't make you in the New Year's. Yeah. So next week will be the last one for 2 weeks. Maybe we'll come up with a different day. We'll keep you guys up to date on the schedule. Exactly how we're going to talk internally, and we'll get back. So, anyways, guys, thanks. Have a great rest of the day, and see you on the next webinar, which we'll make an announcement. Check us on social media and Trading Analysis. Be sure to get on our email list as well. When you come into Trading Analysis, there should be a pop-up here. We don't send many emails out. We only send you something when it's relevant, good content. So jump on our email list, which is going to be right here. Get on that email list, and you might get 2 emails from us a week, and that's it. We don't do right now any back and forth affiliate marketing or any crap like that. So get your email on there. We'll send you something good when we have something for you, and that's that. All right, Trading Analysis Team, thanks, and I'll see you guys in the member webinar in 13 minutes.
Sounds good. See you guys over there.
See you guys. Bye-bye.
Take care.